Hello and welcome to Your Stocks in the Mumbai News Studio. I'm Ekta Batra. Well, it's turning out to be a tough day for us. So the Bank Nifty is down around 1.4%. We have a lot of these heavyweights such as Axis, SBI, all of them which are down and out in today's trading session, along with ICICI Bank, which is down around 1.7%. It is a day where we're seeing a lot of the frontline stocks under pressure. And that seems to be the key highlight at this point. Stocks which are bucking the trend are the likes of Asian Paints, LTI Mindtree, Divi's Labs. So a couple of these stocks are managing to hold their head above the water. But we do have a lot of queries in what has been profit booking after 14, 15 consecutive sessions of gains. So I'm sure a lot of retail investors do have questions today. We have with us Shahina Mukadam, independent market expert, and Vaishali Parekh on the tech side, joining in to answer all of your queries. Vaishali as well as Shahina, welcome to the show. Vaishali, let's start with you before we kick it off in terms of queries. It's a tough day today. We're bleeding red. But would you buy at these lower levels?
Very good afternoon, all of you. I think market today for the first time has witnessed such a fall, and we are at crucial support levels. So near-term support lies at 24,800 to be precise, and Bank Nifty on a near-term basis of 50,850 has broken its support. So I guess we'll have to wait and watch. I will not be in a hurry to buy stocks. But on the whole, it's a corrective bias looks to me because I'm seeing most of the sectors also are showing some signs of fatigue. Stock specific, yes, of course, there are some buying opportunities.
Okay. Any specific ones which you would spell out or sectors that you like today?
So right now, when I was observing, I think FMCG and IT sector, these two are still holding on well, but I'll not be in a hurry. I'll wait and watch.
Okay, so you'll wait and watch at this point in time. All right, well, we have a couple of queries coming in, so let's get cracking on them. We have Shashank, who writes to us from Hyderabad. He holds 500 shares of IDFC First Bank, which he's bought at around 79 odd rupees. So he's sitting on a bit of a loss there. Wants to know what to do, whether to hold or sell at these current levels. Well, this particular stock has actually not done too well in the past 1 year. For example, it's given losses of around 24% in the past year. How would you approach it, Shahina?
I would prefer a switch from IDFC First Bank. There are a couple of issues over here. While they are doing very well on the growth in terms of credit, their loan book as well as deposits. If you saw first quarter, their loan book was up by almost 25% and deposit growth was 36%. So this is good because it is helping them to actually, improve their liquidity ratio. At the same time, the liquidity ratio is still very high. And the impact of what they have done in the last quarter was an impact on the NIMs, which is likely to continue over the remaining part of the year. In terms of valuations also, I would say it is not cheap. 1 year forward, FY26 price to book 1.5 times. So you have other banks in the private sector, for example, Federal, which are larger or similar size and available at better valuations. So to that extent, I would prefer a switch.
Okay, you would prefer a switch. What about you, Vaishali? What would you recommend on IDFC First Bank in terms of the technicals? How is it looking? Would you probably recommend a switch to another stock?
I would definitely agree. Actually, technically, it is quite well placed, but a confirmation comes only about 76, 77. Then we could say that, yes, the stock is getting out of the consolidation and we can aim for a target of 88 to 100. But a switch is always better. In fact, I think some of the frontline stocks like ICICI are still holding very well. So I would focus more on such banks.
Okay, all right. Well, we now have Deepak Dave, who writes to us from Gandhinagar. He holds 100 shares of Birla Corp, which he's bought at around 1360. He's a long-term investor and he wants to know what to do. He's currently sitting on a loss and he wants to know whether he should exit his counters or not. But, the stock reacted well post its numbers. And there are some analysts who have a target of over 1,800 odd rupees on this particular counter as well. But Vaishali, let's start with you on the technicals. How would you approach it?
I think technically it is quite well poised. I mean, it is gradually showing signs of, bounce back because the recent high, what we have seen, as you rightly said, nearly 1,800 levels, it's making an attempt, but still there is no clarity. So I guess wait and watch only unless and until the stock moves above 1,450. I would say that, yes, it could again head towards 1,600 and so on. So I think wait it out.
Okay, wait it out. What about you, Shahina? Because if you look at it on a 5-year perspective, the returns have been great on it. But if you look at it on a year-to-date perspective, it's not done much at all. So what's your sense in terms of how you would approach Birla Corp fundamentally?
So I will borrow Vaishali's term, wait and watch. Basically, it's a small cap cement company with just about 20 million capacity. They're talking of increasing it to 24 million capacity. Valuations are pretty attractive. It's just about $80 at EV by EBITDA. So things are in place. The major issue is that the ongoing tussle between, the promoters in terms of, the Birla Group, the Lodha Group, but it's reaching the final stage. I mean, I think now it would be in the Supreme Court. So depending on the decision, whatever happens and that time frame, the stock will move. I believe till then it will consolidate. So, you can hold with a stop loss. I would give a stop loss close to about 1,230, which is not very far from where we are now. You can hold it to those levels and then wait and watch.
Okay, all right, fair enough. Wait and watch, that's the word coming in on Birla Corp. That stock is just about lower in today's trading session as well. Well, we now have Sriram, who writes to us from Chennai. He holds 80 shares of Dixon Technologies, which he's bought at around 3,500 odd rupees. He wants to know the future prospects of this particular counter. He's sitting on a fabulous profit on this one, almost 7 lakhs. Do you think that there's further upside on this one, Vaishali?
So I would say currently, after making the recent high, it has come to a very crucial support level, and that's where it is. So if we see the stock moving below 12,000, it could be a cause of concern, and it could go towards 10,000 levels. So in my opinion, either book partial profit or wait for some clarity, keep a stop loss of 12,000 and just go through.
Okay, all right. And what about you, Shahina, on Dixon Technologies?
Yeah, I would agree. Book partial profits. The issue is valuations. It's extremely expensive. If you see the first quarter growth, they almost double their profits and their turnover on a YOY basis. So even if you consider this sort of rapid growth and take 1 year forward earnings, it's still, expensive. If you look at it in terms of EV by EBITDA, you look at it in terms of turnover, any parameters, it is expensive. Having said that, it has got plans in place. For example, it's recently tied up with Google, for manufacturing the smartphone in India. So to that extent, things are moving on the mobile front for the company. But I would say, since the investor has made good money, you can book part profits and hold the rest for the longer term.
Okay, all right. Hold the rest for the longer term and book partial profits on this one. Currently at around 12,155 odd rupees. The stock is down around 2 odd percent today. If you look at it on a 6-month basis, it's given returns of almost 70 odd percent. But Dhananjay now writes to us from Mumbai. He holds 1,800 shares of Suzlon, which he's bought at 36. He wants to know what to do with this particular counter. He's sitting on, again, a very good profit on Suzlon. So his money is almost doubled when it comes to that. What is your sense in terms of what one would recommend on Suzlon, Shahina?
I would give it a hold even currently, though the stock has given a very good performance if you see the last couple of months. Also, valuations are expensive. Despite that, I would give it a hold with, you can keep a stop loss somewhere close to maybe a 65, 66 rupees. The main reason is that they are actually going very aggressively to improve the balance sheet quality. You saw the recent news that we've had where they've done a sale and leaseback of their office building. So those are small things that they have done, improve the balance sheet. And of course, as you're aware, like the government is, very aggressive in terms of green energy. They are putting in huge capacities also. They have got a very good order book. So I would give it a hold with a stop loss.
Okay, hold with a stop loss on this one. And what about you, Vaishali? The stock has just gone from strength to strength. What is your recommendation?
So my view absolutely matches with Shahina's. Basically, 65 acts as a very good support. And seeing the chart and the indicators, what it depicts right now, is that it's getting ready for a new round of momentum. So there could be, it could go against the trend that market is showing. I mean, it is still showing a lot of strength. So 65 acts as a good support. And I think the way the stock is moving, it can go towards 80, 83 to start with from here on.
Okay, it can go to 80 to 83 from here on. All right. Well, on that note, we need to take a short break with the news that the markets are still under pressure. So 24,865 is currently where the Nifty is at. We have the Bank Nifty, which is lower by around 660 odd points. Take a break and be back. More queries on the other side. Welcome back. Well, you're still tuned into Your Stocks on CNBC TV18. Well, we've been pointing out that it's a weak and tough market on our hands. Vaishali, before we move ahead, wanted your thoughts on a couple of these banks individually which are seeing losses. State Bank of India would be one of your top losers today, down around 3.7%. And even moving away from banks, stocks such as Vodafone, which is reacting to a tough brokerage note, how would you approach it?
So to begin with, actually the PSU banking index, it's currently just taken support on the 200-day moving average, and SBI also has got a near-term support of 780. So if the 200 moving average support levels break and we see a decisive fall, then in all likelihood even SBI could see a further downslide. So well, currently it's at support, so let's see if it's bouncing back or are we seeing a further slide. Now, coming to Vodafone actually long-term trend was getting better. So even now, on a smaller time frame, that is daily chart, it has broken the trend, and now the near-term support comes at 12. So as long as rupees 12 that holds as a good support, I don't think there should be any panic. But if 12 breaks, the level of 12 breaks, then it's something to worry about, and that could see some slide down. So for now, yes, we've seen a gap down and it's sustaining right at 13. But on a longer term perspective, 12 should act as the support level.
Okay, all right. That is basically on Vodafone as well as on State Bank of India. Any thoughts on Vodafone idea? Shahina, would you ascribe to the fact that there could be further market share loss for the company in the next 2 to 3 years?
Yeah, the market share loss is continuing to happen. So if unless something drastic happens, where they get in some good strategic investor or some revamp of whatever the balance sheet, etc., I think it will be range bound. It's becoming more of a trading stock rather than an investor stock.
Okay, all right. Well, let's get back to queries now. We have VK Sarvanan, who writes to us from Bangalore, holds 1,422 shares of Dhanlakshmi Bank at 51.69 odd rupees, wants to know whether to book his losses or exit at current levels. So this is on Dhanlakshmi Bank. That stock is currently at around 38, so sitting on a loss at this point. Do you think that there's any kind of move up to the buy price of around 51, Vaishali?
So currently it's totally in a lull. I mean, there's nothing really happening in this stock. In fact, it's continuing to make new lows. But I think the only consolation is that it's got into an oversold zone. So if 35 should act as a good support, below 35, there's really nothing much to talk. But from here, one can expect a bounce. So only unless and until the stock moves above 40 to 43, it would be showing some signs of reversal. And probably then one can see a retesting of the higher levels of 45 to 50 levels. But till then, it's in a weak spot.
Okay, all right. And what about you, Shahina? What would you recommend on Dhanlakshmi? It's made an 8 crore net loss in Q1. The NII declined by around 15.6%. The loss was versus a profit also, which they reported. So there has been some downtrend in terms of the fundamentals. So overall, what would your approach be?
Absolutely, Ekta. And the stock price has corrected in line with the weak performance that they reported, the losses. Now, it's a very small cap bank, with market cap less than 1,000 crores. And valuations are not expensive. It's just about one time price to book. It's a small bank based in Kerala. So now I think the only upside going forward from here is if there is any M&A activity. But that's a long shot. So in the medium term, I think, if it's an investor who's looking for the next 1-2 years, it's better to exit.
Okay, all right. Better to exit if you're looking at it from a 1 to 2 year perspective. We do have Vijay now, who writes to us from Chennai, holds 500 shares of Container Corp of India, which he's bought at a rate of around 1,090. So he's sitting on a loss there. He wants to know what to do, whether to book his loss or to switch to some other stocks. Well, interestingly, it wasn't a bad quarter gone by for them. So from the fundamentals, Shahina, how is it looking?
Yeah, I agree, Ekta. Fundamentally, there's nothing, really wrong with this stock. In terms of balance sheet, it's got a good, strong balance sheet. In terms of the first quarter numbers, we saw it showed about a high single digit, 9% growth in revenues, which was an equal mix from, both volumes as well as value. You have had, EBITDA that grew by about 10%. So there's nothing really wrong with this stock. It's not even too expensive. But if you see, it's likely to be a market performer in my view. If you take a medium to longer term, it will grow in line with the overall economy. So if you really want to outperform the market, maybe you should book your loss and switch.
Okay, all right. So that's on Container Corp. Vaishali, any view on that one, on the technicals?
In my opinion, actually, the stock is really corrected from 1180 levels to now 945. And at this level, it's likely to make a double bottom formation. So that means downside risk could be limited and we may see some reversal coming. So I would say if time is not the problem, keep averaging at lower levels if you are looking at a longer period consideration, or else one has to follow a stop loss. 935 would act as a stop loss.
Okay, 935 would be a stop loss for Container Corp. We have Manoj Reddy, who writes to us from Hyderabad, holds 100 shares of LIC Housing Finance, which he's bought at 730. He wants to know what to do, whether to hold, wait, or to buy more or sell his holdings in this particular counter. So LIC Housing Finance is the query that he has, currently sitting on a loss at this point on that particular counter. Do you want to take up the technicals first, Vaishali, on LIC Housing Finance?
Definitely. So 720 was acting as a hurdle, and that's what we witnessed. Yesterday, it did make a high closer towards that level, and from there, we are seeing a retracement. So I don't see the stock, because if market is to show some exhaustion, this too can correct. The view is only positive above 720. So I would say exit for now.
Okay, exit for now, and the view is only positive above 720, but you're not confident of it reaching those levels?
Right now, there is a strong hurdle, and we are seeing that there is some profit booking at this level. So I don't see, and seeing the overall market scenario, we are Nifty is also quite under threat right now. So very difficult to say whether this stock will go against the market sentiment or so 720 would be the trigger. I'm not sure.
Okay, all right. And what about the fundamentals, Shahina?
Fundamentals remain quite strong, actually. So if you're a long-term investor, this is a stock that, you've been holding for a long time. You can continue holding, in my view, because valuations are not expensive. It's 1.2 times price to book current, and it's done pretty well in the quarter one. In the full year FY24 also it did very well. So hopefully, the performance, they will continue on into FY25, also 26, given the fact that the government is giving a lot of subs for low-cost housing. So I would say you can continue to hold if you're a long-term investor.
Okay. All right, well, we have one quick query coming in on IRB. We have Mohan, who is writing to us from New Delhi. He holds 4,600 shares of IRB Infra, which he's bought at around 67.7, so is sitting on a loss. He wants to know the future prospects. Shahina, toll collections were good for that counter. The management seems to be positive about starting FY25 on a positive note, but that's not really reflected on the stock as of now. What's your approach?
Yeah, the issue is over here that it's a very high debt company. You have got two large PE investors who hold almost 35% of the equity or more. The promoter has huge pledges on the stock. So, and also now I think, what happens is that it is not very cheap. So any disappointment that you see in numbers is going to actually either see the stock consolidate or, sort of remain in the same level which it is now for some more time. So I would say, it's a fundamentally risky stock, especially if you're holding it for the shorter term.
Okay, all right. And what about the technicals, IRB?
I would say continue holding because there's really nothing much happening and there's nothing wrong with the stock also. So from here on, I think the stock should do well and one can look for if the longer term is the perspective, 75-80 is quite possible to achieve.
Okay. All right. Well, on that note, we're going to wrap up on the show. But thanks very much for joining in and taking us through all of those queries that we have. Well, we'll leave you with some market opinion from Manish Suntalia of MK Investment Managers. Stay tuned. Closing bell will take you through the last hour of trade.
It's a buy on dips. There is tremendous amount of flows that is coming into the markets. There is a bit of caution because valuations are not very conducive. Roughly around 25% of the entire market is worthwhile buying from a point of view of valuation. It's a pick and choose market. All of that is stays. But having said that, I think the caution will come around the time when you go through the fourth quarter. After the U.S. elections are done with, you have new stocks coming into the F&O segment. All of that will lead to some sort of a volatility. So I think the stance is to make the portfolio a little bit more defensive. Take some beta off the table. I think financials is one area to hide. There's ample margin of safety out here. There is an IT, there is a pharma. These are three sectors, and within that, individual stocks will have their own say. But these are the three sectors to basically go overweight on. And the ones to go underweight or slightly equal weight is basically your capital goods, railways, defense. I mean, they can go through some serious time correction, price correction.